Good evening. My name is Nick Robbins. I'm a professor in practice for sustainable finance at the Grantham Research Institute of the London School of Economics. It's my pleasure to welcome you to this event, Financing the Green Transition, What Role for Multilateral Development Banks? This event is part of the LSE's Shaping the Post-COVID world, and if you want to tweet the discussion that we're having here, please use the hashtag LSE COVID-19. What we want to explore in the next 19 minutes is the role that MDBs, multilateral development banks, can play in scaling up the mobilization of capital needed from the global north to the global south, really to deliver a sustainable, inclusive and resilient recovery from COVID-19. This is clearly a big year to deliver the recovery out of the COVID pandemic. We have renewed international efforts through the G7 and G20, as well as also two major summits, the Biodiversity COP in October and the Climate COP in November. And as we come out of the COVID crisis, we really need to redouble our efforts in terms of mobilizing finance for climate finance for developing countries, going beyond the official $100 billion per year target. And also there's a particular need for an urgent and concerted effort to focus on the debt and fiscal and financing constraints that many developing countries are facing as we come out of this COVID crisis. MDBs can play many roles in terms of this mobilization effort. Clearly, they can deploy long-term patient capital for the public sector, but also for the private sector, drawing in and crowding in many of the banks and investors that want to allocate capital to a sustainable and inclusive transition. Also, MDBs can help work with governments to build that policy framework that is so essential in each country to mobilize capital for sustainable development, the long-term strategies, the investment framework, the sectoral pathways, and so on. And also MDBs have that capacity and expertise, which is so important to help countries scale up their efforts. Now, to help us explore these challenges, we have four fantastic panelists. We'll start with Nick Stern, who is the I.G. Patel Professor of Economics and Government and Chair of the Grantham Research Institute for Climate Change and Environment, LSE, and also head of the LSE's India Observatory. Nick has been chief economist both of the European Bank for Reconstruction and Development and also chief economist for the World Bank. And he's also author of a fantastic report commissioned by the UK Prime Minister ahead of the G7 summit, setting out actually how we can achieve a sustainable, resilient and inclusive recovery. Next, we'll have Josué Tanaka, who is a visiting professor in practice at the Grantham Research Institute at the LSE, and also a leading contributor to the G7 report. Josué also has a distinguished career in the MDB world. He was founding leader at the European Bank for Reconstruction and Development of the climate practice and was managing director there, responsible for climate action through until the end of last year. He's also an advisor to the C40 City Coalition on Climate Finance. We're then delighted to have Carlota Cenalmor, who is a permanent representative for the European Investment Bank in Washington, D.C. And Carlota is the EIB Sherpa and representative for the EIB for G20 issues, both finance and development, and also for broader MDB institutional cooperation. And finally, we have Amal-lee Amin, who is currently the Director of Climate Strategy at the CDC Group and Senior Advisor also to the UK Government on COP26. Before this, Amal-lee was Chief of the Climate Change Division at the Inter-American Development Bank. One thing that Amal-lee is doing at CDC has been leading work on adaptation and resilience, a collaborative to accelerate investments into this area. So four fantastic speakers, really great depth of expertise. In terms of the event, what we'll do is hear from each of these speakers for a few minutes to sort of set out the landscape, the key challenges, the key opportunities, key roles of MDBs. We'll then go into a few of the sort of priority questions that emerge, and then you'll have time for you to ask your questions. So please put your questions in the chat as we go along. We will be voting on these and I'll be asking these to the panelists as we go on. So without further ado, Nick, if I could turn to you to really set the scene for us, maybe drawing from this new report you've done for the G7. Thank you so much.
Thank you very much, Nick, for getting us together, and it's a privilege to be part of this very unusual panel of very senior people in the MDBs who've actually done all this and therefore understand it more deeply than any other group, I think. So first, this is a very special moment in world history when investment for recovery and investment for a new form of growth must be center stage. In many ways, like the period at the end of the Second World War, when infrastructure investment for recovery was at center stage. And more so, just like at the end of the Second World War, internationalism is of the essence. We have to rebuild together and in a different way. It's also a period when there's uncertainty about so many things in the world environment that the confidence and the strength that the MDBs can bring is crucial. So number one, this is a special moment. So what role for multilateral banks? Well, first answer is big now. The second thing is to recognize, and you began to introduce that, Nick, why it is that they can have such a big effect beyond simply the amount of money that they put into a project. The first is around project preparation. Second, around the environment within which projects will live and take place. The investment climate is crucial, and they can contribute strongly to that in terms of policy, in terms of support for institutions, in terms of the creation of country platforms, so that there's a coherent framework within which different kind of investments can take place. Third, their presence itself reduces risk. People are confident, much more confident in surrounding government policies and government behavior in a country where the investment is going to take place if their investors are walking arm in arm with the MDBs. Josué will remember in the early days of the EBRD, I was there, as Nick mentioned, in the 1990s, we had one or two companies that could have at that point bought the entire portfolio of the EBRD, which nevertheless wanted the EBRD together with them on the grounds that it reduces risk because the Multilateral Development Bank has a long-term relationship with the country. They have a whole range they have a whole range of instruments which can manage risk, equity, guarantees, the mezzanines, the combinations of things. They also can help with rolling over in the sense that, not rolling over in the sense of submitting, but rolling over in the sense of moving the investment along. Once it's got through the more difficult phase, then they can help sell on and actually with a bit of luck make a profit themselves, which they plow back in. But that brings in the private sector and other investors. So there's so many ways using the strengths of the shareholding, of the balance sheets, of the instruments, of their presence, that they make a difference. And finally, we have to look at what's necessary for the MDBs to step up and play that crucial role that we're describing. And that means that they have to be able not only to step up their lending now, but also their own lending, of course, must shift very strongly in the direction of sustainability. And further, that level of lending itself must be sustained and indeed rise over this decade. This decade is absolutely decisive. Infrastructure investment doubles in the next infrastructure capital around the world will double in the next 15 or 20 years. It has to look completely different from the infrastructure that came before. Otherwise, we say goodbye to 3 degrees, let alone well below 2 degrees. This is a crucial decade, and it's a decade full of opportunity. But if we ask, if we look to, if we demand that the MDBs step up and sustain that step up to respond to this challenge, then we also have to will them the means to do that. All too often, people shout at the MDBs and say, you must do this, you must do that. But then if you're a shareholder and it means stepping up with some capital resources, often the response is a bit slow or a bit quiet. And that is crucial. If we ask some MDBs to step up, of course they can make better use of their balance sheets, but at the same time, they must sustain that step up, and that will mean more resources. And it's very important that the shareholders recognize that and are supportive and indicate that support in advance as they ask for the step up and the sustained investment. So that's my initial bit, and looking forward very much to the discussion. Thank you, Nick.
Thanks very much, Nick, and thanks for laying out that spectrum of activity. Josué, could I turn to you, drawing on your sort of EBRD experience, also contributing to this new report? What do you think is particularly important now in the situation that Nick has described for MDBs to be doing?
Great, thank you very much. And first of all, thank you for the opportunity to be together and to discuss this topic. I think, Nick, if I may, I think a first opening comment here is really perhaps to focus on the notion of MDBs as a system, right? I mean, obviously I could talk about EBRD to no end, but I think, you know, what's important here is, given the nature of the challenge and given its scale, I think it is the topic in which, you know, MDBs, you know, must, you know, and have to work, you know, closer together. And in that sense, you know, it's very good that, you know, in the years that I worked in MDBs, that this is an area, and, you know, I have the colleagues, you know, from EIB and, you know, also Amal-lee, that we worked together for many years, that there has been essentially for, I think, close to 14 years now, a structure of collaboration of the MDBs on climate action. And I think that that's an important point of view. Obviously, each MDB brings its capacities, its possibilities, and should I say its constraints, right? But the point is, I think, first to start with that. Then to answer your question, and perhaps building both on your introduction and on Nick's points, let me perhaps go into a bit more granularity on those three dimensions of policy, finance, and capacity building. On policy, I think, to illustrate the challenges ahead, you know, how do we connect, you know, what Nick just mentioned to the issues at hand? Well, a first challenge for MDBs is really to be able to integrate, you know, the, I would say, green recovery agenda in the economic discussions that are happening, and particularly in their country strategies as they move forward. Because, you know, MDBs are, you know, most of them are machines, you know, and as machines, you know, they need to have, you know, the right element up front, you know, that drives the activity. So that's one challenge that needs to, you know, happen at the moment. The other one is, what do you connect it to, right? And therefore, what can MDBs do working with their countries of operation on, for example, the formulation of the long-term strategies or the support to the NDCs in order to align, you know, to the objective in relation to the Paris Agreement. So that's the second part. And again, it takes dialogue with the countries, right? And that's one big challenge, because often you can have a lot of pressure, you know, do this, convince country X of Y, but again, countries are sovereign in the end, right? And, you know, you need to have a very strong dialogue to, you know, have, you know, this green agenda integrated. I would say as a final one, sector policy is also, I think, a key area, because at least in my view, the sector level is really the anchor that connects, if you want, the macro view, both on the economy and on overall climate goals for a country, with the implementation, you know, how do you achieve that? And Nick already mentioned investment climate, which is absolutely crucial, because particularly as we will probably talk about private sector mobilization, you know, if you have, quote unquote, sorry my language, a lousy or unreassuring investment climate, that there ain't, you know, private sector mobilization. That's on policy. On finance, Nick mentioned pipeline development. So that's a key element, right? The key element is how do you translate those sector objectives, for example, into a set of projects? How do they relate to climate targets? And as we may talk about it later, you know, the MDBs are all engaged currently on developing methodologies for aligning relative to Paris Agreement. So obviously now pipeline development needs to be done in relation to that. There was also mention about the 100 billion, right? So MDBs have played an increasing role, and perhaps some would say perhaps too large in proportional terms, but at least a positive role in the sense that MDB climate finance increased by roughly 65% since 2015, between 2015 and 2019, has a target of raising from 41 billion, which was the 2019 number, to 65 by 2025. Obviously, my personal comment on that is that this increase of the MDBs should be matched by others, right? It shouldn't be that the 100 billion is entirely basically an MDB game. I think it would be wrong. Nick mentioned risk, and in interest of time, I won't develop that further. We can talk about it. Range of instruments, I think key element there, perhaps also not to sound like advertising for MDBs, is to say that, for example, on the private sector, only 22% of the climate finance was actually in the private sector, right? And that has to do because if you look factually at the MDB system predominantly still has basically public instruments, to work. Perhaps one word on policy loans, which some MDBs have, which obviously are a very interesting combination of the finance with policy. One point also on adaptation and mitigation balance, which is another issue, and I'm sure that Amal-lee will raise that. But if you look again at the numbers and results, 1/3 of the MDB climate finance to date in adaptation. So clearly some rebalancing there. And then finally, to close on capacity building, Nick mentioned essentially policy formulation, project preparation. I would also put a big emphasis on implementation support, because in the end, you don't achieve your carbon emission reductions or your adaptation if your projects are not implemented. So maybe I'll stop here in the interest of time. If there are questions on EBRD per se, I can certainly go into that in detail, but now I'm keen to listen to the colleagues. Thank you.
Thanks so much, Josué, and thanks for giving us some numbers in terms of the quantum of that increase in climate finance. So, Amal-lee Amin, previously at the Inter-American Development Bank, now at CDC, your thoughts in terms of the priorities now and MDBs, and indeed the wider DFI community.
Yes, thank you very much. It's a pleasure to be here with good friends and colleagues. So I think, everything Nick and Josué said, I couldn't emphasize it more in, the urgency really and the critical time in which we all are now. In times like this, where we've had such a major disruption to our societies and economies, we have to see this as an opportunity now to really build that better, to really ensure that we do things differently and bring and integrate resiliency, inclusivity, and very importantly, put economies onto the pathway to net zero emissions or zero emissions by mid-century at the very, very latest. So I think that MDBs, having worked at the IDB and having seen the role firsthand, particularly in working with governments as very trusted partners, is key. It's essential to support governments now, particularly ministries of finance and economy, who will be thinking now how to come out of this global pandemic and really ensure that the measures that are taken now really bring both immediate term benefits, but also put their countries onto a path for sustainable development and very strong growth, as Nick emphasized. And so the MDBs, I think, again, as Nick mentioned, and both Nicks actually mentioned, it's not just finance that is brought, but very importantly, it's that expertise that can be channeled through technical assistance. Critically, I would say, probably in three main areas now coming out of the COVID pandemic. I mean, first of all, to really put in place those, where counter-cyclical measures are being put in place, policy-based measures. Not all MDBs do that, I appreciate that, but some do. Certainly the IDB does a lot of that. Those measures can be really valuable instruments to really reform and set the basis for those structural reforms that are going to be necessary to really decarbonize sectors, and also, I would say very importantly, integrate resiliency into the economy. And so that really has to be, a key part of this of these immediate next steps where relevant. And recognizing the role of technical assistance alongside the finance that will be necessary to support ministries of finance in particular with those fiscal reforms and structural reforms that are going to be so needed. And then how really to incentivize the private sector. Ourselves as CDC, we're a DFI, we only do private sector investment. And, we, of course, want to be able to finance as much as we possibly can in terms of delivering on a green and inclusive, resilient economies. But often the policy frameworks are not in place, but also critically the pipeline, the projects, the assets are just not there. And so the MDBs, working with others, such as the Global Infrastructure Facility that can provide technical assistance for project preparation, will be absolutely essential to build out and accelerate those investments that will attract the private sector. And I think when we look at what's happening globally now, we see all these commitments to be net zero, all these asset managers and investors, pension funds talking about being net zero. Well, they will need those assets to invest in, and we really do need to accelerate that. And now has to be, there's so much opportunity and necessity to be able to do that. And then lastly, and I'll just sort of say a little bit now, maybe come back to this later, is building again on the inclusive nature of the recovery. And I would say that needs to be very much recognizing the adaptation needs of the most vulnerable countries, which are the poorest countries, but also the poorest communities within countries, as well as small island developing states. And it's essential that we don't we don't forget about those, and that the MDBs, who have, again, a critical role in supporting governments in building out their capacity, building out their capabilities in this area, integrating climate risk into their sectoral plans, into their budgets, into their investment planning moving forward. And then, very importantly, putting in place measures to incentivize private investment into adaptation resilience as well. And another dimension of the inclusive agenda is that around the just transition, and recognizing that that there is so much opportunity and need, but failure to integrate climate and sustainability now would only lock in infrastructure, but also workers and communities into very unsustainable practices. But even so, we have to recognize that there will be some just stranded workers, stranded communities, if particularly the MDBs, but others such as DFIs as well, supporting governments to be able to put in place those measures to ensure that that transition brings social and economic benefits, and that the potential negative implications are effectively managed.
Amal-lee, thank you so much. And Carlota, if I could turn to you, the EIB, another part of that MDB system that Josué outlined earlier. Really good to get your thoughts as the European Union's policy bank, climate bank, both domestically and also internationally, and particularly why you're seeing the priorities as we come out of the COVID crisis in the months ahead.
Thank you, Nick, and thank you everyone for the opportunity to be here. I think everyone has eloquently set the scene on, where we stand, what the challenges are, what is the role of the MDBs. And I think what Amal-lee was mentioning right now about, keeping in mind the long term of what sustainability has to be, present in everything that we do, I think is actually where I'm going to start, my intervention, because it's right there at the end of. I mean, we're still in the middle of a crisis, and we know that now is hitting more other countries, but it has hit Europe very, very hardly as well. And what was very important at that point was to continue keeping in mind that there are long-term objectives and commitments of our institutions, and that is the responsibility of institutions like the EIB, but like the other MDBs, to continue making sure that for instance, the environmental and social policies, the robust standards that we have in terms of climate are not relaxed in our commitments in the sphere of sustainable finance, and we should continue applying them. So now that we move from rescue to more of a recovery phase, we should continue seeking for synergies between those long-term climate goals and the shorter-term economic goals that our institutions have to recover. So in my view, what we have to take into account when we are trying to have an effective green recovery program, we should be targeting sectors and investments that deliver a high economic multiplier, obviously bringing the private sector, which is something that we really need to be focusing in, and that is where everything that Josué has also mentioned in terms of innovative financial instruments, the risking for the private sector comes into place, but also bending the emissions curve down to net zero, and that it should be a huge priority in what we are doing in terms of recovery, reducing disparities and inequalities, as Amal-lee was mentioning, and also then building the resilience and adaptive capacity at project and system levels. I mean, we should actually focus on having a program which tries to tackle everything. In Europe, as you will know, I mean, climate has been a priority. We have been pushing for this climate agenda for a long time. At the European Investment Bank, as the EU Climate Bank, not only we started many years ago setting targets in terms of climate, I think it was in 2010, but we have been increasing those commitments as all the other MDBs have been doing it. And we have been working together to ensure that indeed this becomes, that our financing in climate brings along also others. And we're talking now, for instance, in our case, of a commitment, of very important commitments, which was, for instance, last year in November 2019, we took a decision to end financing of unabated fossil fuel energy, of aligning with Paris Agreement by the end of 2020, and dedicating at least 50% of our financing to climate action and environmental sustainability by 2025. This is the way forward, and this requires support from shareholders, and that is where Nick was mentioning at the beginning. I mean, we need to have those commitments. I know that for the European Investment Bank, maybe it's easier. The number of shareholders, I mean, is EU member states, is more limited. Nevertheless, it was not easy to take a decision to get out of the fossil fuel energy. There are many countries which are still dependent on gas, but we just need to be responsible. In the developed countries have to be responsible for the global issue that we are having. I'm not going to, extend too much. The only point that I wanted to maybe mention now, and that is in terms of how the MDBs can help also in terms of the markets, is also the contribution that us, EIB, but mainly the European Union has been leading, for instance, on the EU taxonomy for sustainable finance, which I see it not only as a regulation for the markets, but more as a tool to a classification system for economic activities that makes a substantial contribution to specific environmental goals, and that is what the market needs right now, to have a common language on sustainability, consistent climate and environmental related financial risk disclosures for the investors, and also assessing and monitoring and integrating the risks. And I think that is where the MDBs are also doing a very good job. And I think Joshua was mentioning this group, which has been working for many years already among the MDBs, but try to align on methodologies, and align on definitions. And this is very important for the market, that we do it all together. And I'll stop there.
Thank you very much, Carlota. And thanks to people in the Q&A, actually. We're now getting people starting to get excited and wanting to ask questions. One, actually, if I may, just building on what you said about the EIB's new climate strategy, as you say, which you launched last year, including the decision not to finance fossil fuels anymore. We have today the IEA's net zero energy roadmap, a very powerful document, I think, showing the opportunity, showing the need to mobilize investment, but also making clear that there's really no place for further fossil fuel investment if we're going to meet the 1.5 degree target. I'd welcome sort of thoughts from the panel on that report, how it aligns with your views, and maybe particularly on the fossil fuel investment piece, and how should MDB sort of take that step to move away from fossil fuels, such as EIB and others have done. Anybody like to start on that? Nick?
First, it's a very powerful report, as you say, Nick, and I very much recommend it, although I haven't read in the few minutes that have been surplus today all of it, but I've gone through the summary. The first thing I would say is the importance of investment. And in order to make the fundamental change that we need to make, we have to increase investment very sharply. And that's ballpark 2 or 3 percentage points of GDP. We can't be precise on that, but it's in that range. That's roughly where the IEA comes out. It's roughly where the report which Josué and I led for the G7 summit at the request of the Prime Minister Boris Johnson, that's roughly where that one came out. If you look from a different perspective, if you look from the perspective of the pressures on infrastructure around the world, and ask how we've fallen behind on refurbishment, replacement in richer countries, how the emerging markets and developing countries are going to need to expand their infrastructure to deliver the kind of growth that they're looking for. Again, you come up with numbers like that, and sustained over a long period of time. So that level of investment and the step up in investment comes up whichever way you look at it. And the IEA have looked at it from the point of view of investment need to make that transformation. Second, in thinking about that investment, it's very important to recognize that, at least in the G7, for example, we used to be a couple of percentage points of GDP higher for investment not so long ago, 15 years or so ago. We surely can get back there. Look at it from the point of view of a world suffering from secular stagnation, with interest rates on the floor, planned saving too big in relation to planned investment. Well, the right answer to that is to increase investment, and it does that as well. So I think the first part of the story is that this is investment expansion with a purpose, and it's investment expansion with a scale, and that's what we have to respond to. The second is, and others can come in more strongly, the second is to recognize the nature of the investments and the policies we need to get there. The nature of the investments, well, top of the list is the electrification of energy and the expansion of the electric power sector. Adair Turner led the Energy Transition Commission report, which reported on April the 27th, and April the 27th, and it spoke about a quadrupling between now and mid-century of overall electricity supply. And of course, making that electricity supply 100% green, and that was specified by 2040, which is the date most of us come up with, if we're going to go net zero for the whole economy by 2050. So there's much more to be said, but I think the investment story is absolutely critical now, and it's one further underlining of that. And the biggest part of that is expanding and taking to net zero electric power. Much more, but that is the biggest part of the story.
Great, thanks. Josué, particularly your experience in the EBRD, with obviously many of the countries there are large fossil fuel states and countries and so on, rely on fossil fuels for their growth and so on. I mean, how do you see that sort of shift away from sort of fossil fuel financing by MDBs like the EIB and others are making? How's that going to be implemented?
Well, I think here I should refer first and foremost to the point made by Carlota a few minutes ago about shareholders, right? Because, you know, MDBs are essentially owned, you know, by their shareholders, and the composition of the shareholding has an influence on policy making. And clearly, I don't need to give names, but clearly, you know, the position of certain shareholders at certain moments of history also has, you know, a big influence, you know, on the policy setting. So I think, you know, when Nick started his first line this evening by saying it's a special moment in history, it's a special moment in history, both because of the challenge ahead, you know, the so-called decisive decade that we're in, but it's also a moment in history because, you know, with the events that have happened in a number of countries, there could be the possibility, right, of, I would say, a shift, you know, and, you know, Nick also mentioned internationalism. Well, you know, this is the big opportunity, you know, to try to shift that. And I think the intent of the report that we worked on, you know, that we're still working on, is very much, you know, that, you know. So I would start with that. So that's the first element, shareholders. The other key element to be remembered here is the countries in which the MDBs operate. And I mentioned the word sovereignty, you know, in my little introduction. That has to also be taken into account. Right? And that balance, you know, that dialogue, you know, if we talk internationalism, I assume we're obviously talking dialogue, you know, we're not talking diktats, or we're not talking, you know, and that is where I would say in terms of the politics, you know, and the policies, therefore, of MDBs, you know, things will happen. And so Carlota, in a way, I would say in terms of EIB, obviously, the fact that you have a joint common position, right, of the EU and therefore of the whole block of shareholders provides a context in which you can take the decisions that have been taken, right? And finally, to answer your question, therefore, what do I mean is in the EBRD, indeed, we have countries, I think, like Kosovo, you know, who are, what, 80, 90%, you know, still, you know, fossil fuel, you know, even coal, lignite dependent. How do you manage the transition, you know, of that country, right? And therefore, this question of having a dialogue, right, in the transition to net zero, to try to find out, you know, what the pathways are, you know, country by country, that's part of that policy work that was described, you know, at the beginning, I would say anonymously, but that's where you can immediately see how sensitive and in fact, how complex, you know, that discussion really is. So final point here is therefore to answer your question, I think that in some countries, right, one is going to have to take into account what that pathway is realistically, one is going to have that dialogue, and clearly the end result is clear, but how to get there may vary from country to country.
Great, thanks, Josué. I'm going to sort of move to some of the questions that are popping up in the chat. Thanks to everyone. Keep them flowing, and maybe turn the discussion particularly about the role of MDBs and DFIs to crowd in private capital. All of you mentioned that as a key point. And a question we have from Omar Shakir, particularly around sort of blended finance transactions, first loss capital. What can that be done to crowd in private sector green investment? This is a very sort of voguish discussion, very important discussion. So it'd be really interesting to get some sort of maybe some examples or particular areas where you think the MDBs and private capital can focus at the moment. I was struck, Nick, in your report, the sort of 2 to 3 trillion a year in capital investments that is needed worldwide. Only 25% is in the G7. Most of that is going to be in the large emerging economies. So that critical role of the MDBs in sort of facilitating crowding in private capital is going to be so important. I don't know, Carlota, do you want to start on that about how we can improve this area?
Yes, thank you, Nick. I think, I mean, in climate, I think we are struggling everywhere to bring, private capital. We have been talking about this discussion in infrastructure in general has been going on forever. And we always talk about the same type of things, the risking and everything else. I think in climate it's even more difficult. And I'm saying it's even more difficult because, we have to take care of innovative companies, including those investing in new technologies. And we have to make sure that they have the tools to actually participate into this green transition. I think we have examples ourselves in our institutions, all of us, of initiatives that we have managed to develop. In our case, for instance, is in Europe the the European Fund for Strategic Investments, the famous Juncker Plan, where obviously we were using a guarantee from the European Union to de-risk some of these projects, which otherwise we would not be able to finance, and then private sector would come in, and leverage was very huge. Very big. What I think we have to do is again go into innovative financial instruments. It's not always so easy. We repeat it, but we have layered equity funds, which allow us, to develop experience in sectors like forestry, like biodiversity, natural capital, and we have to really go more into that. Another example that we have recently, for instance, and I know other MDBs have done things with Amal-lee as well in the past, but we are doing a partnership with Amal-lee Asset Management, and this is just an example, but I think it's a good one, which is indeed a program which what it's trying to do is actually developing green debt market in Europe, going beyond the existing green bonds. I think we have all worked in the green bond market, and we have developed it very well. Still, compared to the big bond market, is still a long way to go. But I think we have to continue helping emerging countries to develop that market, not only issuing the bonds ourselves. So I think these are just some examples of things that we can do to bring in the private sector.
Interesting, Carlos, because yes, I think Amal-lee has a similar program with the IFC for emerging market green bonds, about a $500 million dollar fund. Very interesting. Amal-lee, your focus on this sort of private sector role, what are the things that are working in your eyes?
Yeah, so maybe just going back to IDB, where we had, the IDB still does have a program with the UK BEIS department on sustainable infrastructure. And that really, I think, was quite an innovative approach. So it's a UK IDB program that worked in just 4 countries that brought a considerable amount of concessional resource for investments to help, de-risk and bring in mobilized private capital into sustainable infrastructure. But importantly, it also had some technical assistance, significant amount of TA resource that was really was to be used to basically work with the governments, or in the case of, for example, in Mexico, with some of the national development banks, to integrate sustainable infrastructure standards into their project pipeline identification process. And actually, this was very important, or is very important, to help investors have much greater transparency and certainty around what sustainable infrastructure is. And I think certainly, as Carlota knows, we had many discussions, and I'm sure it's still going on without me now, but the MDBs have been collaborating for several years, particularly in response to the G20, around sustainable infrastructure standards and how to ensure that sustainable infrastructure as an asset class can be created. I think this is really important. This is sort of work that maybe, isn't so visible sometimes of the MDBs, but really important to provide those signals to private investors, and, in partnering with others such as the OECD and and feeding into G20 discussions on infrastructure. So those types of activities, I think, are really important, as well as looking at the financial instruments as well, and of course working with governments on the sort of embedding those standards upstream into the policy and regulatory procurement, PPP frameworks, etc., to really incentivize the private sector into those types of sustainable infrastructure assets.
It's really interesting, Amal-lee. I think that sort of whole process of norm setting for private markets is very interesting. Josué, do you want to?
Yeah, Nick. Yeah, I just wanted to because I think also it's important in our discussion, not to give the feeling that all the answers are there and that we're all, in a way satisfied with where things are. And I think this question, as has been mentioned by Carlota and Amal-lee, has been there for many years. I think if you look at the current metrics, we have to acknowledge, that in particular what people refer to as the mobilization ratio of the private sector remains frustratingly low, right? And I think that this is one of the points that we need to work on. That I think post-pandemic, the situation is not going to be easier, right? Because the appetite of private investors, is going to be affected, because potentially the risk, in the countries of investment will rise, and therefore you have a more difficult context. Having said this, two mini comments. One is to emphasize the point that Amal-lee mentioned about what I would call systemic impact, meaning work that MDBs can do that perhaps actually are not translated into investments, by MDBs, but actually spur the development of markets, in the countries in which these systemic changes happen. That's one. The second one is really, and I think this is a bit a response to Omar Shakir's question, at least it's a comment on it, which is to say that I think we have to acknowledge that in terms of instruments and blended finance instruments, yes, all of us can probably have 5 of these meetings like we have today, and all describes, incredibly, complex instrument with arrows everywhere and very long acronyms. But one of the issues is that, unfortunately, most of these don't really scale up. They take a lot of time to be set up, right? They are good, for, panels and discussions. But if you look at the scale of the challenge, as mentioned by Nick, it falls short, right? And therefore, for example, the Amundi one is a bit of an exception, because that has scale in itself. Now, are there other Amundis out there that do this? That's also a question, right? Because eventually that's what you would hope, right? So that's it, just a few comments on that. And not for you, Nick, the moderator, to feel that we're too complacent.
Well, no, a healthy dose of realism. And Nick, I wanted to bring you in, and then Carlota, please.
Yep. I fully endorse what Josué was saying about the mobilization ratio. It has been disappointing, but I do think that now, as they focus still more strongly on that, the MDBs are moving in a better direction. But what I wanted to do was to point to 2 things relevant to scale, which are not picked up in blended finance or mobilization perspectives. The first is the country platform. Now, we've spoken about the policy and environment, and that is important. That's not what I'm talking about when I'm talking about the country platform. The country platform is the set of planned investments or desired investments, because you can't plan them all because they're mostly private sector, but the set of desired investments, the kind of story that the IEA was telling, the kind of story that we've been telling about where investment priorities are. And this is actually part of this special moment in history, because countries are looking now at the kind of investment they need in a much more purposive, in terms of direction, and a much more quantitative way. So this is a moment where country platforms for investments can be set out, of course, primarily by the country concerned, but the MDB can be very helpful. We're edging that way. I won't say we've got it yet, but we're edging that way in the UK with the government's 10-point plan. Now, it doesn't cover the full scale of the story, not by any means, but that's an example. We're working with Indonesia, many of us, who are struggling to put, but with struggling with intent and starting to move in putting together that kind of story. So I think this is a moment of investment planning, not in the old Gosplan sense, not in the sense of the Planning Commission of India working to allocate investment across the states, but a sense of direction in the particular areas we need to go. Of course, power, a very big part of it, but much more than that. So I think the MDBs working together can play a very strong role in the country platform, which is all part of the confidence building for private sector investment. That won't come up in the mobilization ratio, but it's very important, and it's particularly important now as we reset our ways, but recognize it won't be all public sector investment. The second argument where we can scale up is really very different. And that is the MDB as the innovator, the MDB as the setter of examples. And the MDB should work according to 3 criteria, which were baked into our souls at the EBRD, but essentially are there in all the MDBs, at least all of them that work well. And that is sound banking principles. What you do has to have returns related to the risks. Otherwise, your MDB will not survive. It won't deserve to survive. The second is additionality, that it is going where the private market left by itself cannot yet go. And it can be additional because of the strength of the shareholding that it has, because of the long-term perspective of the shareholders, because of its mandate, and so on. So it's got to be additional, go where the private sector cannot go alone, because if it can go alone, then probably it should. And the last one is that it should have development impact. In case of the EBRD, it was transition impact, according to the criteria of that particular institution. Now, the EIB would be in large measure taking forward the policies of the European Union. That would be its notion of development impact, and IFC would, or should, have a development impact notion, which is more around SDGs and so on, but they should more or less coincide one way or the other. But it's the frontier story that I want to emphasize, the additionality in terms of going where the private sector can't go. You don't want to go where it's daft to go. I mean, if the private sector won't go there because it's silly and it'll never survive, then, read it and note. But there are many areas which we know we have to go in, which will become much less risky as we learn how to do them well. And of course, as we have the country platform and the policy. That's the frontier story. So one way of putting it is that the MDB should be on the frontier or just beyond. And in what it does, it should advance the frontier so that other people will come through behind it. And I think those 2 ways, the country platform in the sense of overall direction for investment, and the power of the example, using the strengths to be on the frontier and to push the frontier, those are 2 areas where you can really make a difference to scale, and it without actually trying to run it through blended finance and mobilisation. That is, my points are in addition to blended finance and mobilisation, not in the place of. These are highly complementary.
Wonderful, Nick. I think it was really helpful in getting beyond those that sort of the narrowness of some of these metrics. Many thanks. Carlota, I think you wanted to come in on this point as well.
Yes, I wanted to, I make a point about what Josué has mentioned about, bringing in the private sector and bring a little bit also the part of self-awareness that we have to have in the MDBs. And I agree, Josué, one thing is the Amundi thing, and another thing is how we can really scale up. And I think we MDBs, we have a lot of work to do as well on that. I think we had advanced, and Nick has mentioned that we had advanced and we are doing better in trying to be in private sector, but we have some difficulties into really agreeing on standards. And I think that is something that the MDBs have been working, as Amal-lee and Josué, you know it very well, we have been working on methodologies, definitions. I mean, for years, we all do the same. We all have the same objectives. You can maybe, say, as Nick was saying, maybe the EU objective in development impact is slightly different from IFC, but is this so much, so different? No, it's not. And even like that, we have difficulties to have those standards and work as a system which will allow for the private sector to really, having talked to one, knowing that the other is going to have the same requirements that the other MDB you have talked to. And this will make things much easier, not only for promoters, investors, but also for governments, if there was a way that the MDBs could really advance in this cooperation as a system in a different way. And I think this is a critic to ourselves. We have been trying, and there is a lot of work still to be done, and we need to be pushed, and we are being pushed by the G20, and we are being pushed by others. And even if we do things better, there is a lot of room for improvement.
Great, thank you. I think that was a really rich response to that sort of private sector interaction piece. We've had a couple of questions, I think, on this question of the moment, Nick, as you framed at the beginning, and particularly around, and then Josué, you came in on the sort of the role of the shareholders and so on, and a particular question from Jonathan Walters, who's a former World Bank director, about do you on the panel sort of see the shareholders going to sort of seize this moment, particularly in terms of further capitalization and further enabling? Any thoughts on that? I mean, how you think the shareholders might be minded at the moment, Nick?
Yeah, there's a forecast approach to the question, and there's a enthusiastic changing the world approach to the question. I've spent my time in finance ministries. Well, I've spent the time in the finance ministry in my own country and as chief economist of World Bank and EBRD, talking a lot to finance ministers. And finance ministers and ministries are quite good at saying no. Yeah. And they've heard excited arguments about why we must do things before. And they've heard in our own treasury in the UK, there's the language of the bleeding stump. In other words, that people try to explain to you that not doing what they suggest they're doing is like cutting off an arm. So we're aware that finance ministries behave like that for a reason. Yeah, that a lot of the arguments they're presented with are not totally sound. Now we have to show, and I think that this is not something that's only outside finance ministries, but we do have to show the special circumstances of the moment, both in terms of risk and in terms of opportunity. And we have to make the argument, and the language Josué and I used in the G7 report, is that at the moment, ambition is less risky than caution. So we have to set out that argument with the evidence, and that's what many of us have tried to do. So I think that there is a real chance that finance ministries around the world will want to do this, that they do recognize it as a special moment. But we have to make that argument. They're not villains. They are people who will listen, but they've heard special pleading many times. So we have to make sure that that argument is strong and the quality. I also think that this is a moment for presidents and prime ministers to take the big view of the future. And I think some of them are ready to do that. Now, we're not going to sit and name names, but actually quite a lot of them are asking the question about this big moment. So I think it's finance ministries and it's presidents and prime ministers. So yes, there's a chance, but we have to make the arguments clear and strong.
Great, thanks, Nick. Josué.
Just three quick compliments there to say, number one, from a capital perspective, MDBs to a certain extent are a good deal in the sense of, their capital structure, in particular, the so-called callable capital element. The second one is probably shareholders will seek first to push optimization before putting new money. So that probably will lead to rather interesting debates, because in a heightened risk environment, how do you do optimization, right? And so what's the scope, for that? And the third one, also in the spirit of being very open, this evening, is actually one on capacity of the MDBs. If you say, let's double their capital, can they really double their investment? And I would then say two questions. One is the question of the country dialogue, right? Because that would assume, that what Nick mentioned, for example, in terms of these country platforms and these country investment plans are actually agreed, that the pathway of decarbonization is agreed. And all these things we need, in my experience, to be a bit careful. We cannot just assume that, top down, all of this happen. And the other one, a very interesting one, is also the balance. Let's assume you double the capital of the MDBs. What happens to mobilization, right? Because if you have the combination of doubling the capital and then saying the MDBs need now to do 60% climate finance target, well, it would be interesting to see in terms of the universe of investment, you must not lose that mobilization point. So an interesting equation.
Thanks, Josué.
Can I just underline what Josué said about value for money? Because it's critical, particularly in relations with finance ministries. Mm-hmm. Our colleague Amal Bhattacharya has done these sums, other people have done the sums, but for ballpark one shot, $40 billion in paid-in capital, you could double the flow lending of the MDBs. Maybe take it from 75 billion a year to ballpark 150 billion a year. And if you make an adjustment in the lending ratio constraints, say from 1:1 on overall capital to 1 to 1.5, then you triple. Now, a one shot 40 billion that allows you to double the flow of lending. There isn't any better value for money for finance ministries around the world. That you can spread it out over 5 years. You're paid in capital story. So even a country that was taking 25% of this, and actually no country would take 25, be much lower. But even if it was taking 25% of the 40 billion, that would be 2 billion a year over 5 years. To double the lending capacity of these institutions, it is incredible value for money. It comes from the genius of Keynes and callable and paid in capital. But that value for money story is something that you say to ministries of finance and they sort of nod, but we have to keep on saying it. So they go beyond nodding and actually do it. It needs, of course, internationalism, because you don't put your flag, you don't put your country flag on MDB lending. And so it is extremely important that we get together. But this is a moment actually where I hope that internationalism can flourish, because COVID has taught us many lessons, but surely it's teaching us, I hope, the importance of internationalism, and that we can change quickly if we recognize we have to.
Carlota, I want to bring in you here on the sort of looking at that, how is that same potential seen in DC, and then Amal-lee, bring in you. How do you see this potential that Nick was laying out in terms of the sort of scaling up of MDB resource?
Well, I think I think one of the main words has come up in the discussion, and Nick mentioned it, and is additionality. I think we have seen it as well, because at the smaller scale, we have at the EIB this discussion with the European Commission regularly when we are asking to receive more funds, you know, for the blending instruments and everything. They said, yes, we know you want to do more, but we don't want, I mean, this is not supposed to be crowded out. So you're supposed to, I mean, I give you more. It's not to put the money where others can put it. You really have to prove, I mean, where the additionality is and where this money is going to be. So this, I don't think is it. This is not supposed to be a competition for volume in terms of our institutions and see who gets more money to be the one who does more finance. I think it's a question of final investment. It's a question of where the money goes, the impact that it has, and how much leverage you manage to obtain. And that is where you have to really explain to your shareholders how you're going to use those funds and manage to get the leverage which is needed and the impact. And therefore additionality is crucial as an explanation argumentation to be able to get additional funds which are needed. Great,
thank you. Amal-lee.
No, just to build on that point by Carlota, and also as I think the last point that Josué made, and I mean, I fully agree, obviously, with Nick that, you know, value for money, you know, the MDBs are, you know, essential in being able to tackle the scale of the investment needs and that are now required. At the same time, I do think having climate finance targets potentially is not going to incentivize mobilization. I mean, I agree with the point on additionality, but if there's limited pipeline, limited assets available, then there's no incentive to mobilize private capital, because those climate finance targets actually requires you to, you know, you only count the amount that you are financing, and the mobilization would be counted separately. So I do think we need to think, I mean, this in the context of a capital increase, but not only, about a more of a wider set of incentives. I'm not saying get rid of climate finance targets, quite the opposite, but I think they need to be complemented with other targets around mobilization. And I think also around probably the quality and the inclusivity of climate finance as well. So on quality, adaptation finance, much harder to do, particularly in the private sector. But we really need to ensure that the MDBs are doing that really, really hard stuff, because if they won't, then who will, particularly in the low-income countries. And then in terms of the ensuring that the LDCs in particular are also going to benefit, including from, you know, in their economic decarbonisation agenda, because I think, again, just having a climate finance target on its own is just going to incentivize or continue to incentivize going for big ticket items that will, by definition, mean the bigger countries and big types of investments that will be in the energy sector, which of course is essential. But how do you then ensure that you're incentivizing those other smaller, particularly in adaptation context, and particularly in smaller countries like small island developing states and LDCs. So, you know, bringing those incentives in. So I actually think we need more of a framework around climate finance that goes beyond thinking about purely just one finance target to something that's incentivizing mobilization, quality and inclusivity of climate finance as well.
Thanks very much.
Could I come in on this?
Yes, of course.
The point that Amal-lee's making is fundamental. This is about sustainable development. And all our investments should be about sustainable development. I mean, are you going to say what fraction? Well, I'm going to have 30% unsustainable and 70% sustainable. It doesn't make any sense. And from now on, all our investments have to have the sustainability element at center stage. That will help us with the resilience and adaptation story, because so much of what we need to do is mitigation, resilience, and development all rolled together. And forgive those of you who've heard me on this before, but I think it's very important. Mangroves, development, adaptation, mitigation. They protect against storm surges. They absorb carbon. They nourish the fish. They actually provide home for the tigers and the tourism. Restoring degraded land, clearly mitigation, adaptation, development wound up together. Decentralized solar, all of mitigation, adaptation, development. Wise tropical building design, all of adaptation, mitigation, development. Public transport, adaptation, mitigation, development. System of root intensification for rice, so you don't flood the paddy fields, so you don't release the methane, you save on the lifting of water, and it's more robust against difficult. I mean, you can go on, but so much of what we do is, or what we need to do, is those things wrapped up together. It's sustainable development. Now, not all of resilience is exactly like that, but I think we should have criteria not expressed in terms of 50-50, because that's actually almost explicitly ruling out the huge examples that I just gave. But what we can say is that at least 50% of the investments supported should have a strong resilience element to them. That's a different way of saying it. The first way, 50-50, is actually wrong. It's misunderstanding development. But if you say 50% should have a resilience part of it, then that seems to me that that makes sense, and we can discuss the numbers and so on. But the story of sustainable development being what we're all about now, at some point you shouldn't have to call it climate finance. It's finance for sustainable development.
Exactly. So we've got a few questions, and we've actually got only a quarter of an hour left for this masterclass on MDBs. So one question, and Nick, it was something which was highlighted in the report you did for the G7 for the Prime Minister Boris Johnson, was about actually the sort of composition of climate finance. And this is not always the role for MDBs, but particularly raising the quantity of grants. Frank Schroeder has mentioned this, the sort of the grants, and maybe particularly for LDCs. Anybody want to comment on that, the balance between loans and grants, particularly at this time?
An initial reply on that, which is that obviously when we look at the range of activity linked to climate and sustainable development, particularly if you take, for example, what Amal-lee has been working a lot recently on adaptation and resilience, there is a need to a certain extent, for grants. I think one has to be extremely prudent in using that. I often use the expression, we need to be very careful in the development of blended finance instrument that we don't, exceed the sugar doses, in each of those projects, because, then, they can result in habits that are then difficult, to withdraw, but I think given the scale, and again, that's the whole part here, that if if we believe, the points, at the beginning, that, the challenge and the investment requirement is in the trillions. And if you look at the scale at which, for example, the discussion of the 100 billion is at. And if within that you look at what the grant share of that amount is, I mean, it's completely disproportionate, right? So the only thing you can say is to say you need more of it, and you probably need as wise a use of it as possible so that you focus on those issues where basically, market solutions, for example, may not be coming.
Thanks. Any more comments on this particular point of grants?
Yeah, I mean, I agree that there is a need, I think, particularly on adaptation resilience, not just for supporting governments, which is important, but also a lot of the, I mean, we've been looking at CDC to how we can invest more in adaptation resilience. And and we are seeing some, really interesting opportunities. They're very small scale and often very early stage, so more venture capital or requiring seed capital. And, of course, venture capital in an African context, is not necessarily doing venture capital in Silicon Valley context. So, it's there that having more grant funding is going to be really needed to build out the pipeline of investable opportunities. Particularly these SMEs who are going to be so needed in the sort of local context to provide the technologies or the services for that particular area, to farmers, to the water utilities, to all sectors, basically. We really need to build out that ecosystem. So I think having grant funding there is going to be essential, certainly what we're seeing, as well as supporting governments and also the broader project preparation support, because I think again, we have to, I've said it a few times now, but we have to accelerate the pipeline development because there is a lot of capital. I mean, there's a lot of capital, private capital looking for bankable projects, but at the moment, they're just not there.
Great. Okay. Before we sort of go to sort of closing thoughts, I'd particularly like to get all of you to think through how the MDBs can really sort of scale up their efforts in the next 6 months to seize that moment, which Nick set out at the beginning. We've got a question from David McCauley, particularly on nature-based solutions. We talked about this a little bit, but I'd be really interested in sort of thoughts about that area. It's a very important area, both in terms of responding to the climate agenda, as you were saying, Nick, that these things are often interlinked, but also we have the sort of broader nature crisis. Maybe any thoughts, particularly on the sort of the nature-based solutions agenda and the role of the MDBs?
Let me say one or two things. I'm sure the others will come in as well. The net zero story has really helped because the best machine for removing carbon is the growth of trees and plants and capturing carbon in the soil. And the reason why we think good soil is dark soil is that the carbon in the soil is good for growth, and we can capture carbon in the soil. So the move to net zero and the desire for negatives from many, particularly private sector firms, is, I think, a moment where the chance of getting nature-based solutions is become much stronger. But you have to organize it in a way that projects are prepared and risks are managed. But companies are now prepared to put money in without a formal payback in terms of a revenue stream, because for them, the revenue stream is the carbon that's saved and that they can show. So it's actually a special moment when wondering how you can get people to put money in is actually got a partial answer. But I think making that work well, because there's a lot of con artists and greenwashers out there, making that work well requires partners who have a deep responsibility to be careful about these things. So I do think it's a moment where MDBs can be of real value in doing that. And also, of course, it reminds us that a forest saved or a forest planted or land which is restored is much more than the negative carbon. It's about productivity of land, it's about biodiversity, it's about watersheds and so on. It's much more than simply the negative carbon emissions, but that gives us a chance at the moment where so many private sector firms have declared that they want to go negative, and actually doing nature-based solutions is doing something that's clearly negative, rather than actually saying, well, I've gone in with blogs in country X, and blogs have said that he will accelerate what they would otherwise have done, and so I've saved some carbon. Now, that argument isn't always wrong. It's often right, but actually it's much more convincing if they're clearly captured carbon in the project itself.
Great, thanks. Carlota, I know that the EIB has been sort of focusing a lot on this sort of area, again, particularly potential as Nick's laid out, but I think sort of huge risks either of sort of diversion of efforts to nature-based solutions away from sort of fundamental transformation of energy. But where do you see the sort of pathway forward for this area?
Well, I think you know, as we have talked in the past for the other topics, I think we see again that what we need to do is work together on partnerships with this. I think we have been working, for instance, with the World Resource Institute. They are doing an amazing job on this in project preparation linked to nature-based solutions, and the EIB is working with them in this. I think we don't need to reinvent the wheel. We need to, work together on existing solutions to this, and I think developing those together are very important. I think the work which is being done also in terms of the MDBs on nature-based solutions is going in the right direction, and I think we should be pushing forward all together into that.
Okay, thanks. Amal-lee, anything to add from your perspective at CDC, particularly in the sort of looking towards sort of COP on this as well?
Yeah, I just to say, I think the MDBs, but also DFIs really need to start mainstreaming nature-based solutions. And I think, agree with all the points about the sort of carbon sequestration, but I think particularly when thinking about infrastructure, the benefits that nature-based solutions can bring for resiliency of infrastructure is huge. And actually at IDB, when I was there, we commissioned with UNEP some work to look at how to make the business case for the role of nature in ensuring resiliency of infrastructure. Nick mentioned watersheds, whether it's coastal zone management, whether it's looking at protecting, pretty much all infrastructure. If you look at, and we hear examples certainly in Latin America, in Central America, in Costa Rica, the areas where they've been most devastated, whether by hurricanes or El Nino, is where they haven't had where they've deforested and they've lost a lot of the natural resources. So I think that's really essential. And actually at CDC, we have a really interesting project in Pakistan, a wind farm, which we actually did support and work with the company to restore the mangroves for the purpose of ensuring the resiliency of that wind farm, because it was on a floodplain, but actually the benefits go way beyond, particularly the livelihood benefits, in terms of additional fishing opportunities for local communities. So, I do think, we've seen the focus on nature-based solutions, rising up the agenda. It was a big focus at COP25, but I think certainly for COP26 and heading into Glasgow, we're hopefully seeing the maturing of this agenda, that nature has to be part and parcel of everything we do. We can't, it has to be mainstream and integrated into everything.
Thanks, Amal-lee. That's really good. So to sort of really, I'd like all four of you to really think about sort of how we make all this real. Lots of very wise remarks that you all made. I think lots of sort of pointers to where things work and so on. Actually, a question we come in, which a comment actually from Emily Dick Ford, from the Caribbean, an academic in sustainable finance, and saying despite all a decade of actions, the Green Climate Fund and so on, she's still seeing that sort of MDBs in her region are still engaging largely in traditional financing and sustainable finance, as perhaps we discussed today, still a novelty. So I suppose particularly, how do we make sure that this really does become the normal practice day in, day out? So Josué, I'd like to start with you and then go around to your closing remarks. Really, how do we drive this agenda forward? Thank you.
Well, thank you, Nick. So look, just to show consistency between the beginning and the end, of my remarks, I would really put 3 points. The first one, particularly if you put a kind of 6 months period, is that, hoping that we do manage the transition from, the rescue phase pandemic to, in a way, the recovery phase. It is really this element in terms of the MDBs to be able to really reflect in a serious manner, what we've been calling the green recovery into the dialogues with their countries of operation. So that's the first, I would say, element, because that will actually determine what happens after, right? The second point is the work, I think, the investment in the long-term strategy, because with all the discussions, on the MDBs about Paris alignment and all this, well, what does that mean, in practice?
Right.
What is your direction? Where are we trying to go? So I think investment in that area is very important. And the last one, I think, maybe to put some points that Carlota mentioned, essentially a good balance between the investment part and what I would call the systemic policy part. For example, mentioning standards, trying to work on market standards, for example, the sustainable infrastructure definitions. This is all very important because, in fact, it may be that there is zero investment of an MDB, but you're really having an impact way beyond. Thank you.
Thanks so much. Carlota, to you for your minute.
Thank you, Nick. I would say that cooperation, and I think the word internationalization that Nick was using is good, but I think is cooperation among MDBs, but also with governments and with other DFIs is fundamental. I mean, this thing of working as a system is something which it sounds very good, but it's not so easy to implement. And I think it requires a lot of effort from everywhere. From everyone, is at the level of the institution, from shareholding, and that means as well coordination among shareholders of our institutions. It means coordination among ourselves at technical level, and then also with governments. Nick mentioned country platforms. They have to be led by the governments. We need to know what they need. We need to invest taking into account the gaps, and not just because projects are easy in that particular country. So cooperation, partnerships, I think are crucial at this moment.
Great. And Nick, your thoughts? Your final thoughts?
Well, I don't want to repeat what was said before in the closing remarks, because I'm very much in agreement. I would just say one thing, is that what we have to do now is to see all investments as sustainable investments. We have to see that we're now embarked on a much more attractive but rather different form of growth and development than we saw up to a few years ago. That this is the growth story of the 21st century. So it's not a trade-off. You're either traditional or you're sustainable. There's only one way, and that's sustainable. And it is actually a stronger, faster, more resilient, more inclusive form of growth. And if that's built in to, if you like, the model of change, the growth model, the development model that the MDBs have in mind, and that they're sharing and developing, not by themselves, but within the countries that they're working with, then that, I think, would be a tremendous advance. And the other ideas that were just sketched out would actually have a sort of an overarching home in which they fit.
Fantastic. We're on the hour. We might be cut off, but Amal-lee, I would like you to have the last word if we can squeeze in, please.
Thank you. No, I agree with everything that was said. I think just add to that, it's the incentives, how to incentivize all of that. And, you know, concessional resource can be used to do exactly that, to promote that more systemic whole of financial system approach. I think the climate investment funds have probably been most successful in enabling that, but, you know, still a long way to go. And also, I think how the incentives, or how MDBs are incentivized to work with countries through a whole of economy approach as well. Because I think, you know, again, it's working across silos within the MDBs that also needs to be broken down. So incentives, whole of financial system, whole of economy approach.
Well, thank you so much, Amal-lee, Carlota, Josué, and Nick. A really fantastic session. I think actually it was very honest, which I think is really, really helpful in these days, and a huge sense of potential. Thank you so much, and thank you for listening.
Thank you.
Thank you.